Welcome to The Explainer. Today we're digging into a world of incredible risk and, just maybe, incredible reward. We're talking about high-stakes finance, how you convince someone to fund a hole in the ground that might just be worth billions.
Okay, so I want you to think for a second about the tech you rely on every day. That smartphone in your pocket, the electric cars you see on the road, even those giant wind turbines powering our cities. What's the one thread that connects them all?
Believe it or not, they all begin their journey as minerals pulled from the earth. That's right. Everything from the lithium in an EV battery to the copper in a wind turbine starts with a mine, a project that is unbelievably expensive and notoriously risky.
And when I say expensive, I'm not kidding. We're talking up to $500 million just for the construction phase. That's before you've even mined or sold a single ounce of anything.
So that brings us to the core question, doesn't it? With that kind of price tag and all that risk, how on earth do you get investors, banks, and funds to write the massive checks you need just to get started?
Well, the short answer is you have to transform that gamble into a meticulously detailed, rock-solid plan. The very first step is creating what the industry calls a bulletproof business case.
You see, investors need a crystal-clear roadmap. They need to see the entire life of the mine, planned out from A to Z. From the initial exploration phase to find out if the stuff is even there, through the design, the construction, the actual operation, and all the way to a plan for closing the mine safely decades later. Every single step has to be mapped and costed.
Now here's something that might surprise you. You'd think most of the time is spent, digging. But you'd be wrong. A staggering 60% of a project's entire timeline is spent before anyone even breaks ground. It's all feasibility studies and securing the financing. The biggest hurdle isn't the engineering, it's the paperwork and the number crunching.
And you better believe investors go through that plan with a fine-tooth comb. They're asking some really tough questions. Does the team actually have experience? How sure are we about the geology? And this one's huge. Is there already a guaranteed buyer lined up? Will this thing still make money even if the market for the mineral crashes?
But here's a little dose of reality. As our source material, Mining Capital, points out, even if you have the world's most perfect business plan, the financing process is just brutally long. And projects almost always take way longer than anyone expects.
So if getting a simple bank loan is so hard, how do these massive projects actually get the cash they need? Well, this is where things get really creative. Welcome to the surprisingly diverse menu of mining money.
The traditional ways, getting a big loan or selling shares on the stock market, they still happen, but they've gotten really, really tight. So the industry has had to get innovative, and that's where alternative finance comes in. These are super creative deals, often from specialist players like commodity traders, and they're tied directly to what the mine is going to produce in the future.
And just listen to some of the names for these deals. Offtake finance, royalty finance, farm-in agreements. They sound like they're straight out of a financial thriller. But one of the most interesting and popular ones is called streaming.
Okay, so a streaming deal is actually pretty genius. It works like this. An investor gives the mining company a huge chunk of cash up front. We're talking hundreds of millions of dollars. In return, that investor gets the right to buy a percentage of whatever the mine produces, for years, at a fixed and deeply discounted price. It's a win-win. The company gets the capital it desperately needs to build the mine, and the investor gets a long-term, cheap supply of metal.
Okay, so you've got a bulletproof plan. You've got all these creative financing options on the table. You must be good to go, right? Well, not so fast. A huge number of these projects still fall apart at the last minute. Let's talk about the reality check, why deals collapse.
The truth is, risk can come from absolutely anywhere. You've got operational risks, like the geology turning out to be way harder to mine than you thought. There are financial risks from currencies swinging wildly. And then you have huge legal and political risks, especially if you're operating in the less stable part of the world.
And those risks turn into very real, very painful deal breakers. Maybe the geologists were wrong, and the minerals just aren't there in the quantities they hoped. Or maybe the financial model was based on a fantasy price for gold that's never going to happen. Two of the biggest killers? A government suddenly refusing to issue that final, crucial permit, or failing to get what's called a social license to operate from the local community. Any one of these can kill a billion-dollar project dead in its tracks.
So after all this, all the risk, all the complexity, all the collapsed deals, you have to ask, why does any of this matter? Well, it matters because this high-stakes, high-wire act is literally the engine that builds our modern world.
Every single time you pick up your phone, get in an EV, or just look at a solar panel on a roof, you are seeing the final product of one of these incredibly complex, nail-biting financial gambles. This invisible world of finance. It's the essential first step for pretty much everything in our tech-driven lives.
And this connection is only getting more important. Just look at the green energy transition. It absolutely runs on minerals. EV batteries need massive amounts of lithium, cobalt, and nickel. Wind turbines and solar panels are packed with copper and silver. Powering this clean revolution means we're going to have to finance more mines, not fewer.
And that leaves us with a huge final question. We know the transition to a clean energy economy is going to require more mined minerals than at any other point in human history. So knowing the incredible risks and the mind-boggling complexity we've just talked about, the real question isn't whether we need this stuff. It's how on earth are we going to finance it all?